Hi there, Richard here, and talking about the finance industry sector as well as the stocks. This is indeed the geek, as they call it, which is resting against a support line at 4,300, or just above. The market force is slightly negative. This is on a weekly basis, so we wouldn't expect any downside from this, unless, of course, the indices break down heavily. But I would expect that support to stay. Moving on to the stocks, this is ANZ on a weekly basis. We've talked about the head and shoulders pattern in this stock before. It did break down through this support line a couple of weeks ago, but has subsequently rallied back up to retest it from sort of underneath. And there is, of course, the possibility that it will go higher, but in the event that this neckline here is broken, then the target would be down around $16.50. Looking at Westpac, if you can visualize that head and shoulders pattern, well, the right shoulder never really formed for Westpac, and it's been drifting lower. Market force giving us 3 weeks of negative activity. So in the event that this line is broken here, then $20 and $16.85 would be the next target. Looking at AMP, really sideways trend for the best part of the last 6 months. Not much joy there at all. One to stay away from, as is Westfield. Sideways activity since September last year. No joy except for dividend play, if that's what you've held. Suncorp Metway, also very much sideways, lots of lines here, but effectively, really not much going on. $7.80 through to a high of just $9.60, so a couple of dollars on a short-term play, but the market force has given us 1 bar to the downside. We'd look for a break here in the expectation that this would go lower. If indeed that is wave 5, that would be a double top, and the measurement between $8 roughly and $9.50 is $1.50 to the downside, so around about $6 would be the target in the event that that actually continues to break down. This is QBE, and it's been in a long sideways trend. The market force got us into that very nicely, and $24 down to $16. There's $8 of opportunity there over the best part of this year, so it's a pretty long grinding steady downtrend, but we've found support recently, and a couple of bars on the market force with a slight increase in volume suggests that there is upside there. A target would take it from 15 back up on a retracement basis around about 61 or 3/4, would give it somewhere around the $20 mark. Looking at Perpetual, it's gapped up $30 to $36, probably $39, so one would expect that gap to be closed in the event that there is weakness in the finance sector. I guess we could draw that trend line across like that. That would be fair and reasonable. These gaps are generally closed, so target of about $25.85. On NAB, slow grinding down trend 3 or 4 weeks ago, had a heavy down day. Worth probably having a look at the daily chart to see what that looks like. Clearly these are very tradable. Break through, but break down on weakness, and indeed market force very nicely kept us there in that trade on the short side, $26 down to $23, so there's $3, and at the moment we've got a spike in volume, or slight increase in volume, and possibility of testing from 24 to 24.80 would be on the cards. Lendlease, let's have a look at the daily on this. Tracking neatly from $6.80 up to $7.80. $8 would be a fair target for that. That looks to be a flat correction. This is in 3 waves, A, B, C to there. So one would expect some downside to be around the corner, taking this back down below that low there at about $7. IAG Insurance going sideways, not much trading opportunity there. Commonwealth Bank, let's go to the daily and see if that makes a little bit more sense. Certainly this slow grinding trend down from just under $50 or $54 down to $47. That's a reasonable range, but it's happened, over the space of 2.5 months, and the market force has given us a signal, buy signal, back in early December, and that market is tracking up to $50. That's a big round number, and it's probably likely that that'll meet with some resistance, and but obviously, if in the event that the broader market unfolds, and there is the target that we set at $46, say 50, so that's slightly below that price action. And ASX, that was the announcement of Singapore coming in to buy it out. That deal hasn't gone through as yet, but it spiked massively up and then retraced $43.90 back down to the previous support line here at $36.80. So a big drop in the space of a heartbeat, and currently support's just kept it up, but volume has actually dropped off a bit there now, but the market force hasn't gone to negative, so that's a watch and wait. And that really was the last chart. So going back to the financial sector, it's slightly negative, but clearly the event that this support is held, then the upside target would be a good 300 plus points, good 600 points above where we are now.